In my videos, I always say that price always follows liquidity. Only after waiting for liquidity to be removed can you look for an entry point for a trade. This is the basis of any smart money model. First run on liquidity, then reaction, then trade. But sometimes something else happens. The price withdraws liquidity, and instead of reversing, it continues, withdrawing liquidity again and again. You may have seen this on NASDAQ and EURUSD over the past week and a half. That's why I decided to make this video. The fact is that this is not a coincidence, and there is an explanation for this movement. This model, the market maker buy model, is one of the key ICT models, which the author himself calls his favorite. It shows how a market maker doesn't just withdraw liquidity, but builds a structure through it, with momentum, a return, and delivery of the price at a premium. We will analyze it step by step, how it is formed, where to look for an entry point, where to place a stop, and why the entry point does not appear where most people expect a reversal. All this will be demonstrated on 3 charts: NASDAQ, EURUSD, and GBPUSD. Each of them follows the same logic but has a different implementation. You will see how the model works and, most importantly, understand when it is truly valid. To understand how the market maker buy model works, you need to temporarily forget about the standard liquidity withdrawal return entry model. This structure describes not just the entry point, but the logic of how the market maker turns the market around. From liquidity withdrawal to final delivery at a premium, each stage is subject to one task: to redistribute the volume and take stops from both sides. My vision of this model is simple. When there is an obvious trend in the market, more and more liquidity accumulates in it, above the highs and below the lows. And in order for the market maker to grab it, they must convince most participants that the trend has broken. This is the main task: to create the illusion of a reversal. Take one side, and then reverse the price and take the other. Now about the structure of the model itself. In its initial phase, there is always consolidation. A normal range is formed in which participants trade from the boundaries, set stops beyond the extremes, and the market accumulates liquidity, both above and below. While the price remains unchanged, the market maker creates conditions for manipulation. Once liquidity is gathered, the next phase begins: redistribution. This downward movement is often aggressive. It knocks out stops below the range, draws sellers into the market, and makes everyone believe that a trend in the opposite direction has begun. In reality, the goal of this movement is not a decline, but rather to bring the price to a discount. Only in this way can the market maker create space for future upward movement. Next comes the key moment, the smart money reversal phase. This is not just a candle or a pattern. It is the point where most of the sell-side liquidity is withdrawn and where the price begins to reverse for the first time. There is nothing left below. All that remains is buy-side liquidity. And now the task is to rebuild the structure in order to reach it. At this stage, reaccumulation begins. This is the zone where the market makes its first upward impulse. It's important that FVG remains in this impulse, so that the structure changes and the price does not go vertically, but leaves a zone to which it can return. It's from this zone, FVG, order block, OTE, that the first entry will be built. But this is only the beginning. After the first impulse, the market stops again, returns to balance, and regains volume. These phases can repeat themselves: impulse, accumulation, impulse. And each time, if the structure remains, you have a chance to enter according to the scenario. The model ends in the premium, in the very zone where the aggressive downward delivery originally began. Only now does the market maker remove the stops of those who have been selling all the way up. This is the final delivery. Here, the market closes the cycle, and the market maker completes the redistribution. That is why the market maker buy model is not just an entry after a raid. It is a scenario where each stage is linked to the previous one. If you only see one part, the raid, the impulse, or the pullback, you are not seeing the whole picture. The real advantage comes when you understand what stage of the curve you are at. Are you entering the first impulse or already in the reaccumulation? Are you working with a reversal zone or catching up with the final delivery phase? It is this logic that makes the model work, because you are not entering against the market, but at the moment when it itself changes direction. Now let's see how this model was implemented on the NASDAQ. The first thing to pay attention to is the trend. Almost no one talks about this, but this is the key to understanding the entire model. On the NASDAQ, the trend is clearly upward, and there's a large accumulation of liquidity on the chart in areas where sellers' stops accumulate one after another. After that, the consolidation phase begins. At first glance, it looks like a normal range, but if you look at it through the logic of a market maker, this is a phase of accumulation of large short positions. It is at this moment that the market seems to freeze, creating the illusion of equilibrium. But within this range, preparations for manipulation are underway. Then there is an aggressive downward movement. This is the classic redistribution phase. The price knocks out all longs, withdraws liquidity pool by pool, and importantly, there are almost no pullbacks after each withdrawal. This is an important clue for those who understand the structure of the model. There is a raid, but no return. This means that the entry point is not yet given because the market maker has not yet finished collecting liquidity. After the sell-side liquidity is withdrawn, the market reverses. A reverse impulse appears, which clearly forms a change in structure, leaves FVG, and sets a new vector. This is the first reaccumulation, the phase where I was looking for an entry point. I will mark it on the chart. Here, there was a return to FVG after the impulse, and it was from this zone that I went long. It is important to emphasize, the entry was not at the bottom, not at the extreme, but after confirmation. We see a change in structure, there is an imbalance, and the market retains the shape of the model. Specifically in this trade, I didn't set the stop according to the classic method, but for the nearest liquidity, in order to maintain RR according to my system. In the original model, the stop is usually set a little deeper. I will also show this on the chart. You can choose what suits your system. After entry, the price continued to rise. This is the delivery phase. We take out the highs, break through key liquidity levels, and enter the premium zone, and that completes the market maker buy model. The entire cycle from accumulation to redistribution and delivery has played out completely. And when you look at the chart with this logic, it becomes clear that this is not chaos. It is a scenario that repeats itself. The only question is whether you see the entire cycle or only react to one of its phases. Now let's analyze EURUSD. Here, the structure of the model looks almost perfect, an excellent example to help you understand the whole logic. So again, an uptrend under which large liquidity pools remain. No one will just take them away. Aggressive downward delivery is needed. Next, consolidation forms. And I'll say right away, this model cannot be determined by it alone. This is a trap for those who short at random. Then an aggressive downward movement begins. Sell-side pools are removed one after another. This is the redistribution phase. As soon as liquidity is collected from below, the market reverses sharply. Momentum arises, the structure changes, and FVG remains. The scenario is confirmed. Returning to this FVG is my entry point. This time, I set the stop according to the classic method, below the extreme. The goal is to remove buy-side liquidity. At the time of recording the video, the final stage is not yet complete, but the structure remains. And even if you did not enter this trade, I hope that the analysis itself helped you finally understand how the market maker buy model is formed in practice and what exactly happened in the market last week. I would also like to show you the GBPUSD chart. I won't analyze it in detail. The movement is almost identical to that of EURUSD, but the entry itself looks much clearer here. A clear FVG, a good return, and a much better RR. Just a reminder, if you trade Forex, don't get hung up on one asset. EURUSD and GBPUSD often move in sync, but the entry point can be significantly better on one of them. So keep both charts in front of you. It can significantly affect the result. If you want to trade even more easily, start with the OWL Smart Levels indicator. It does not give chaotic signals and does not overload the chart. It simply shows one specific entry at the right moment. You open the chart, see the entry zone, stop, and take, and you can act immediately. No unnecessary analysis. OWL works equally well on crypto, stocks, and currency. The rules are simple, the logic is transparent, and the result is stable. And so that you can get started even faster after purchase, I will send you the OWL Helper Expert Advisor, which will simplify the entry point and fully automate the execution of the strategy. The link to the indicator is in the description. To get OWL Helper, just message me on Telegram. Hi, send me the OWL Helper Expert Advisor. I bought the indicator. And add the date of purchase. If you want to understand in more detail how the indicator itself works, there is a dedicated video on the channel. The link will appear in the upper right corner. The market maker buy model is not just one entry after a raid. It is a scenario in which each phase logically moves into the next, from consolidation to final delivery. If you understand where you are within this structure, you will always have an advantage. Today, I showed you how this model worked on NASDAQ, EURUSD, and GBPUSD. 3 different charts. The same logic. I hope you now have a better understanding of why the market withdraws liquidity more than once, why the reversal does not always happen immediately, and why it is important not to rush into the entry. If you found the video useful, please like and subscribe. This helps the channel and lets me know that I should do more of these analyses. If you have any questions, please write in the comments how you use this model and what else you would like to see analyzed. See you in the next video.